Today we're diving into something that's not just about money, but about peace of mind. We're talking about how to build a secure financial future for a loved one with a disability. Let's get right into it.
Let's just start right here with this quote from a parent named Candace. Because before we get into all the technical stuff, the nuts and bolts, it's so important to remember the why. This feeling, this uncertainty she's talking about, it's the whole reason these financial tools were even created.
And that really gets to the heart of the challenge, doesn't it? How do you possibly plan for a future that you can't predict? How can you be sure the person you love more than anything will be taken care of long after you're able to do it yourself? It's a heavy, heavy weight. But the good news is, there are some really powerful tools out there designed just for this. Okay, so let's jump into our first tool. Think of this as the foundation. We're going to start with ABLE accounts, which are really designed to be user-friendly and to empower people in their day-to-day lives.
So, what in the world is an ABLE account? Well, think of it like a special savings account with a superpower. The money in it can grow tax-free, which is great, but here's the crucial part. The money in this account generally doesn't count against you when it comes to qualifying for essential public benefits like Medicaid or SSI. And that, right there, is an absolute game changer.
Let's break this down because there are some really cool features here. First off, the name itself, achieving a better life experience. That says it all, right? It's all about independence. Notice that it's owned and controlled by the person with the disability. That gives them direct say over their money for things like housing or school. Oh, and that age limit? It's actually expanding in 2026, which is huge news and will help so many more people. Of course, there are some rules you gotta know. One of the big ones is how much you can put in each year. For instance, in 2022, friends and family could put in a total of $16,000. Now that number is tied to the federal gift tax, so you'll always want to check the current year's limit, but it gives you a clear idea of the yearly cap.
And here's another number that is just absolutely critical to understand: $100,000. If the ABLE account balance goes over that amount, the person's monthly SSI checks are suspended. Now, notice I said suspended, not terminated. It's like hitting a pause button. Once the balance drops back below the limit, the payments can start again. This just makes sure the account is a supplement, not a total replacement for that core support.
Okay, so that's the ABLE account. It's a fantastic tool for daily expenses and giving someone personal control. But what if you're planning for something bigger, like an inheritance, or you just need more long-term flexibility? Well, that's where our second tool comes into play, the Special Needs Trust.
A Special Needs Trust, or SNT, it's a totally different animal. This is a formal legal setup. Instead of the person owning the money themselves, the funds are held and managed by someone else, called a trustee. The whole idea here is that because the beneficiary doesn't technically own the assets, it doesn't mess with their eligibility for public benefits.
And this slide really shows you how different it is. An S&T is managed by a trustee, which provides a layer of oversight. And get this, there are no contribution limits. None. You can fund it with some serious assets, even property like a house. And it's typically used for those quality of life extras that government benefits just don't cover. Things like a vacation, special therapies, you name it.
Now you gotta stick with me here because this part is so important. Not all special needs trusts are the same. It all comes down to one question: whose money is funding the trust? If it's the individual's own money, say from a lawsuit settlement, that's a first-party trust. If it's funded by someone else, like parents or grandparents, that's a third-party trust. Why does this matter so much? Because of something called Medicaid payback. With a first-party trust, whatever money is left when the person passes away has to be used to pay back Medicaid. But with a third-party trust, nope. That remaining money can go to other family members. It's a huge difference.
So, we've got these two amazing but very different tools. The ABLE account, which is all about control for daily needs, and the Special Needs Trust, which is about flexibility for bigger, long-term assets. So let's put them head to head.
This is the question, isn't it? The one every family has to ask. And it's not about which one is better, because they're both great. It's about which one, or maybe which combination, is the right fit for your family's specific situation.
This table just lays it all out so clearly. I mean, look at the differences. Control? With an ABLE account, it belongs to the beneficiary. With an SNT, it's the trustee. Contribution limits? Capped every year for an ABLE account, but totally unlimited for a trust. And that Medicaid payback we just talked about, it always applies to an ABLE account, but only to a first-party SNT. Seeing it like this just makes their different jobs crystal clear.
So, at the end of the day, when you're trying to decide, it really boils down to these three things. First, control. Who should be managing the money? Second, complexity. Are you okay with setting up a more formal legal trust? And third, scale. Are we talking about money for daily life? Or are we talking about a large sum like an inheritance? Answering those questions will point you in the right direction.
But what if the answer isn't so simple? What if it's not an either-or choice? What if the best strategy isn't about picking just one of these? And this right here is the big aha moment for so many people. These tools are not rivals, they're teammates. In fact, they work beautifully together to create this amazing financial safety net that covers you for both the short term and the long term.
So here's how that actually looks in practice. Step 1. You use the ABLE account for all the everyday, weekly stuff. That empowers the individual, gives them autonomy over their own spending. And then, step 2, you have a third-party SNT sitting in the background, ready to hold a large inheritance or to pay for those big quality-of-life things, all without risking benefits. See? They're doing two different but equally important jobs.
And that really brings us right back to the beginning. Getting a handle on these tools, the ABLE accounts, and the special needs trusts, it's part of a much bigger role you play. It's about more than just managing money. It's about being an advocate. It's about using every tool you have to build a life of security, dignity, and opportunity for the person you love. And with a smart plan, that is absolutely something you can do.